Minutes, we'll begin with the regulatory and policy panel. So if I could begin to invite Dax, who is over there. Richard, you're on your tablet. Juan, are you here? Pamela, over here. Can we have you on stage? And Constance, if we can get you on the stage. We'll just begin. Mr. Cameraman, are we ready? Good, we're ready. Juan, we need you. Everyone got their coffees? Had their coffees? We all good this morning? 1, 2, 3. Okay, Constance. Okay, good morning. My name is Pinder Wong. I'm the Master of Ceremonies today, the MC. Just some rules of procedure. For those of you, please turn off your mobile or anything that makes a sound. Please put it on vibrate. There was a gentleman who shall remain nameless who was on the phone yesterday, and I just want to say that if you do want to have a conversation, please carry it outside. If you do persist, I will eject you. So you have been warned. So here we are on day 2 of Smart Contracts and Smart Cities. I would like to go just in the interest of time, just go straight in. We're going to have begin with regulation and policy panel, basically moderated by Constance Choi. This basically is financial regulation, consumer protection for digital currencies and smart contracts, open questions in policy issues, and legal mechanisms for blockchain applications. So with that, I will hand over to Constance to take us through this panel. Over to you.
Thanks, Pindar. So we have a real treat here, which is, in this space, which is relatively new, only a few years old. These are some of the most seasoned warriors on the front line of law and policy. So all of these folks have been working in this space for as long as any professional has. And really have represented some of the first and most significant companies in the space, as well as pioneered some of the first innovations in new financial consumer protection innovations for new businesses. So I'm going to just let the panelists take a few minutes to introduce themselves and share their background, and then we'll jump right into all of these thorny issues that we have to grapple with in the financial world.
Okay, great. So my name is Dax Hansen. I'm a partner at Perkins Coie, based in Seattle. It's a large full-service law firm with over 1,000 lawyers, mainly in the U.S., but some in Asia. I'm a partner in what we call our technology, transactions, and privacy group. So I'm a technology lawyer, software, internet, wireless, hardware. That's been where I cut my teeth as a lawyer. But for the last 10 years, I have chaired the firm's electronic financial services practice, which is really where technology meets money and value systems, mobile payments and prepaid products and video game accounts and things of that nature. And so in 2011, when Bitcoin and other decentralized virtual currencies really started becoming more mainstream, given my background, some of the early pioneers that Constance mentioned contacted me, and I should say it's been, the rest is history, but it's been a tumultuous ride since 2011. Then there have been many, many legal developments. There is scarcely a week that goes by without at least one significant legal development. And so we have tried to identify those and on blogs and other places. If you're interested, we can kind of recreate history here. But I think that I'm interested in this panel conversation. I think you had asked us, Constance, to be kind of practical and let what we've seen in the past inform some of the issues here, and we've certainly seen a lot.
Good morning. I'm Pamela Morgan. I am an attorney by trade. However, I've spent most of my career advising and working with and in small businesses. So I bring the entrepreneurship perspective. I work with a number of very early startups in the space. And so we navigate regulation from that perspective. And what do we do with startups? when they're not funded or when they're looking for initial funding, and how do these regulations impact them, and what can we do from a technological perspective to implement good governance and use the technology in a way that makes them sustainable and able to grow. Additionally, I am a board member of C4, which is the Crypto Consortium, which is a standards and certification body. Currently, there are some security standards that are up for public comment, and I encourage you to take a look at them. They're called CCSS, Cryptocurrency Security Standards. And they're not meant to be a standalone standard. They're meant to complement current IT standards and specifically target areas where Bitcoin and blockchain technology have unique concerns. So I'll end it there.
My name's Richard Levin. I'm a partner at the global law firm of Bryan. We have about 1,200 lawyers and offices all over the world. I'm also the co-chair of the digital currency practice team, which brings together practitioners from the securities and derivatives and commodities regulatory side, such as myself. Also our technology lawyers, people like Dax, and we have people who are in litigation, enforcement, IP, employment law. My practice started off in the late 1990s when electronic trading was first starting in the United States, when people were talking about taking stock exchanges from being places where people yelled at each other and waved pieces of paper around, and 28-year-olds decided that it could all be done by computer. And I've been representing firms in the space since then. Spent most of my career on Wall Street, representing 2 joint ventures of 12 of the largest banks in the world. Started getting involved with digital currency, I have to admit, when one of my friends who played World of Warcraft, believe it or not, told me that the Chinese government had shut down World of Warcraft because people were using gold from World of Warcraft to buy goods and services in the real world. And I thought, that's an amazing phenomenon, that's the future. So I've been working on this in this space since then. Wrote a chapter of a book on US regulation of digital currency. So as we talk today, you'll be hearing me probably focus pretty heavily on what the regulators are thinking.
My name is Juan Llanos. I've been on the compliance side within companies as a chief compliance officer for 3 companies in New York City, and currently advise early stage startups on how to build a minimum viable compliant product, and BCP, so they can get their business off the ground and not face, not make flagrant mistakes. And my experience with the cryptocurrency, and first of all, the companies I've been a compliance officer with are all MSBs, money transmitter, non-bank financial institutions, basically, or payments institutions, payment services providers. And we have had to deal with all of the patchwork of regulation for prudential regulation globally, sometimes, especially in the United States, very complicated. And also I've been, my expertise is anti-money laundering and countering the financing of terrorism, CFT. So in late 12, early 13, I saw the 2 things. I was within a company as an executive, and I saw the writing on the wall in terms of this peer-to-peer value transfer mechanism that was Bitcoin. And I said, we are going to be disintermediated at some point in time. And I also saw that the value transfer mechanisms, I knew from my experience, they had been regulated for a long time. So I started writing a blog and advising the industry that regulations would be coming very soon, and that happened in early 13.
So we hear a lot of comparisons to the early internet, that this technology is just as transformative and promises to be a fundamental piece of infrastructure. We've heard a lot about how the investments in this space right now are almost $1 billion and that exceed that of the investment in the early internet. Now, there are differences here, of course. What you're seeing is a P2P, a very powerful P2P technology that's running into the most highly regulated sphere in the world. And you have a whole host of regulations that assume the way financial regulations work. And you're seeing the emergence of these new asset classes which defy the boxes and borders of regulation as we know it. We actually, as general counsel of one of the first exchanges in this space, it was really interesting to see a lot of these new startups that had these great ideas suddenly realized when the FinCEN guidance came out in 2013 that instead of being a totally unregulated software company, they were actually, you know, in financial regulations. So my question is, what kinds of key challenges do you think we're facing here as entrepreneurs try to innovate and they come up against regulations that don't quite fit, and where regulators don't understand the technology enough to really find where the gates and the fences should be?
What are we facing? Well, we're facing an area where you need to have, I think, your legal consultants on speed dial. I mean, I hate to say it, but I guess I'll dispel the myth that we're in a gray area. As Constance said, you know, that in 2013, the view was, look, this isn't a financial service, this isn't a prepaid access, it's not a financial account, you know, it's a software. And with the FinCEN, the Financial Crimes Enforcement Network guidance in 2013, all of a sudden it was clear there was regulation. So I guess I'd say the ship has sailed to take the argument that this is unregulated. It is regulated, either regulated as a currency, it's regulated as a security, as a commodity, or something else, and there will be some legal regime that applies. The existing laws do provide significant guidance on how to analyze these issues. It's not easy to find the answers because there isn't a virtual currency Bitcoin specific law. I mean, the laws that we're dealing with were drafted before anyone knew of a decentralized ledger or a virtual currency like this. Yeah, and so there's a lot of analysis. So there's some tough issues to work through, but you can get to some pretty good clarity. And we're in an area now where we are seeing virtual currency specific laws being adopted, or having some guidance from regulators that are tailored to virtual currency considerations, where they adopt some definitions, some terms, and they tell us how they think it applies. So we are in this era where we're going to see virtual currency specific laws, but that's not widely available or widespread at this point.
The way I explain it often is, first of all, there's two layers of regulation, or two major spheres of regulation. One has to do with financial crime prevention, and that is a globally harmonized set of regulations that come from the Financial Action Task Force that Rich mentioned yesterday, and that is something that has been in place for a long time, and it's getting a new, fine-tunings are happening every year. And so that and the definitions for money, a definition for value transfer, are very broad. So this is what I brought to the attention of the industry in late 12, early 13. There's definitions about value transfer or monetary equivalence, or anything that substitutes for money, that basically make anything of value that is transferable subject to regulation, right? So if you're and when we have conversations with Treasury, they say, we don't care if you transfer value with smoke signals, with with pebbles, or with a new electronic value transfer mechanism. You're transferring value, right? So you're subject to regulations. So the concept of value transfer has been regulated for a long time. So anything that has to do with value transfer is subject to regulation. The other aspect I'm sure we're going to talk about is prudential safety and soundness of intermediaries, or brands or companies interfacing with consumers. So if you are a service provider interfacing with the consumer, someone comes and shops at you, whatever it is, you're bound to be subject to some kind of regulation or licensing requirement or authorization requirement. So these are two spheres, and it both touch on or affect this emerging industry.
I'll agree with some of what was said. However, I think that we risk a situation with new innovation, and this technology is so disruptive and so different than anything else that we've seen. And we tend to have this idea when we're confronted with something new and different to try to apply the same rules and to understand it by analogy. And so we look at these technologies and these uses and we say, oh, this looks a lot like this, even though it's not necessarily step by step. And so I think that we need to really consider where these regulations apply. If you're operating as a bank, okay, if you're taking custodial access of funds, you know, if you're taking custody of customer funds, you're acting like a bank would in a traditional method, but you're using this technology to effectuate that. Certainly there's regulation, but there's innovation that's happening in this space that isn't that, and that distributes control in a way that we haven't seen before. For example, I specialize in multi-signature technology. And so one of the things that we use multi-signature technology to do is to allocate risk in a very different way. So, for example, if you were to give your money to a company that's operating, you know, as a wallet and they were to control your single key, obviously they're acting as a bank. But if you were to give your money, your Bitcoin, to a company that had diffused control, and maybe you don't even give it to a company, maybe you have 3 or 4 of the keys and there's a backup key on the side. Is that the same thing, and does that need the same level of regulation from a consumer protection perspective, from a implementation perspective? Do we actually need that same sort of regulation to effectuate the goals? Because underlying regulation is purpose. And that's one of the really cool things about blockchain technology, is we get to rethink the purpose of regulation and say, do these rules as applied to this industry actually effectuate the purpose? And if not, let's do something different. We have an opportunity to do something different, and this is the catalyst for that dialogue.
I agree with everything you say there, Pamela, and I guess what people should expect is that that regulators and law enforcement, more often the issues that people are facing is from law enforcement these days, at least in the United States. But I think that those who are launching products and services, participants, should be expected, you should expect for there to be, in some ways, an overreach. And it's maybe not intentional. As Juan said, these laws are broadly written, and they're broadly written for a purpose. They either pick up banking, depository type services, or non-bank financial services. As Peter at the Coin Center says, it quacks and walks like a financial institution, right? I mean, that if it does that,
it's activity-based. If it performs a function, it falls under the same.
But you know, we have to take a step back here. I mean, this is a great conference, and I love these conferences. And sometimes I feel like we're talking about curing cancer, and we're saving the world, and we're going to the moon. No, we're not. We're talking about technology. We're talking about technology that has transformative capabilities, but in many respects to the regulators, it's just another technology. And they don't have the staff to go into what I would call the ivory tower academic discussion. They're looking, we talked about it with Pindar in our group, better, faster, cheaper. They're looking at how do we regulate this industry, how do we protect the public and the systemic and prevent systemic risk in a way that we can deal with it. And one of my favorite ancient aphorisms is, a fish stinks from the head. The tone at the top. In this industry, the executives leading these companies have to realize they set the tone. They have to get over this notion that it's somehow some ephemeral magic technology that we created. No, it's a technology, and you have to deal with the regulators. You have to figure out what the regulators are looking for, and you have to modify your business to fit within the world of regulation. You can have productive discussions with the regulators and say, these regs are a bit of a square peg in a round hole, and maybe we have to tweak the regs. But the fact of the matter is, we all have to live in the environment we are operating in each jurisdiction. And if they think it's currency, fine, you have to deal with it like it's currency. If they think it's a derivative and they're going to regulate it like a derivative, then you need to be ready to address those concerns, or a security. And I think we have to be very careful about going into the, I would say, ivory tower academic world where we just start thinking this is something beyond regulation. To me, that's just a fruitless exercise and a bit of intellectual gymnastics that you're just going to waste your time and wind up getting shut down or sanctioned.
Well, I'm going to take a contrary view there. And the reason I take a contrary view is because it's not an ivory tower exercise. You have people, smart people, business people, and lawyers both, who are just reading the existing laws and regulations and trying to apply them to the product and service that consumers want and need. And since the Satoshi white paper, we have had a new paradigm imposed on us, and things just don't fit. And so it's not, you have to be careful not to go too far. I agree with you, Rick, to say it's so different, we're so unique, we're curing cancer, right? It's different. But at the same time, there are fundamental questions about how regulations and laws apply.
I think we all agree with that. We all agree that there are fundamental changes that have to be addressed.
And I say fundamental. I mean, it's at a high level, and people are looking for a path forward. And if, for instance, there is a money transmitter regime that applies, or there is a travel rule, funds transfer rule that is being imposed by FinCEN, the question is, well, how do I comply with that? If I don't have the information I want to comply, there has to be a workaround. It's almost like in the payment card industry standard, you either have to encrypt it or you have to have some alternative safeguards. And the question is, what are those alternatives, and can we proceed with them?
I just don't want people to make the bet that the founder of Silk Road made. I mean, I used to speak at these conferences, and I would say, are you going to take a chance? Now he's being prosecuted. He received 2 life sentences to be served consecutively. This is a young man who's never getting out of a U.S. federal prison. And I don't think the United States is going to be the only government that says, if you break the rules and you do certain things that are criminal, we're going to lock you up.
There's a big difference between Silk Road.
No, but I think the notion
products.
is that you have to get a fundamental understanding of the regulations that apply to you, and then you have to figure out how to develop a compliance program and a business model that will fit after a healthy discussion with the regulators.
Yeah.
If you just turn your back on regulation and say, I'm not going to pay attention to it, you're a fool, and you're going to wind up in prison. And I don't want to see this audience or the rest of the community suffer from, I would say, a blind devotion to almost a utopian, idealistic view of the blockchain. I think we need to be practical.
Yes, so actually I have great sympathy as someone who is trying to follow the law at the beginning of the space, where the laws, you read the letter of the law and you literally could not follow the law. There was no it was unclear what was being transferred, whether when you sign a transaction, whether that was a matter of free speech or whether that was actually moving value. And a lot of companies in the space, notwithstanding Silk Road, are trying to offer legitimate products and services and finding that the parameters of the law just don't fit what they do, and that the sausage-making factory of lawmaking takes a very long time. So in the absence of clarity, it was very unclear what to do moving forward. And a lot of these guys wanted to do the right thing. And I think right now we're seeing this kind of tension between a lack of a common lexicon and the fact that law is made by analogy. So things like custody and control now are up for debate. It's unclear, whether someone who runs a platform actually has custody or control of funds, which are ultimately controlled by the end user. So on a practical, and we are seeing guidance. So we've seen now recent guidance from the CFTC. You've seen some things coming out of the SEC earlier. Of course, FinCEN was the first to jump in, financial crimes being the highest priority. But this has taken years. This has been 2013, 2014, now we're here in 2015, having finally had CFTC's stance. So what would you, on a practical level, what would you advise companies to do when the laws are unclear, when you have to wait months for a clarification to come out of a regulatory agency, and in the meantime you have this hammer of imprisonment, extreme penalties hanging over your head, and on the other you have market survival. You have an idea, you have a team, you have to pay salaries, you want to push your product out to market.
That's exactly what it's a great question for me, actually. I provide my advice, and I agree, this is a great conversation. There's actually no antagonism, there's just complementary points of view, and I think we can agree with both, right? And I always say, and my aphorism is, regulation is inevitable, yet valid, right? There's reasons why it's there, and you cannot overcome it, you cannot just get around it. And compliance on the receiving end is onerous, it's expensive, yet valuable, because it will get you places. It will get you up off the ground, it will allow you to operate. Think about all these companies that are now applying for licenses, and they're already in the market. They have the first mover advantage because we're able to obtain the authorization to operate. The question is whether that's fair for the rest of the ecosystem or not. And this is the other fight we have to fight, right? So the practical advice to any startup is, I always give is, let's focus on the 20% that will cover 80% of your butt. You know, all of the things that need to be in place so you can safely launch your product. And my advice is always focus on the spirit of the law. I am a non-lawyer, and I'm on the engineering side, the product side. So let's build the controls, or let's build the flexibility on the product, on the platform, so we can start implementing, you know, triggers, thresholds, rules, etc. Eventually, when we hit them, when we get the traction. But we have to be mindful that companies have to prove their concept, they have to launch, they have to meet milestones, they have to get off the ground. So we have to be very pragmatic and take calculated risks. And of course, you also help them exploit regulatory arbitrage opportunities, right? You go to certain jurisdictions, you exploit a marketplace that is more lenient, you get out of heavy-handed law enforcement jurisdictions, et cetera, et cetera. So, and this is a global technology and a global opportunity, so we can afford to do this. And but again, the other fight we have to fight is, which is another conversation, is how to make this a level playing field for everyone. Because right now, only the best funded companies can access the best legal advice and the best and the licenses, the owner's licenses that need to be obtained.
I couldn't agree more. I see a lot of this. I see a lot with clients who come to me and say, you know, hey, listen, I've got this great idea. You know, we've got this team. We've been bootstrapping it for however long. You know, what do you think it's going to take for us to comply? And when we actually look at the cost for them to retain ownership. So this is a VC issue, right? This is a funding issue. So then these companies have to look at the reality of, do we sell off part of our company or give equity to our company in order to be able to fund these compliance or regulatory issues? In other words, how do we fund this compliance question? And so, and we don't even know if we do comply, right? If we do, we need to comply. And depending on what their technology is, and depending on how they envision their technology to be used, many times, at least in my experience, people are locating outside of the United States. They're looking for jurisdictions that are more friendly, that are less onerous and less costly to comply with. Now, you know, the question becomes, you know, do we want to do that as a country? I think if we're sitting here in Hong Kong, yes, we're glad that the U.S. is quite costly, right? But you know, what is the actual impact on the industry, and what is the impact on innovation in the industry? What products aren't being innovated or created right now because those people have stopped working due to the regulatory?
Just to frame this for the audience, and then please continue, how much does it cost to get compliant, to register at the SEC, or to have a money transmitter license that's valid in the States?
It depends.
Legal fees, and there's also opportunity cost. You know, you could be launching in a market or testing a product in the real world, but you're not able to operate because you're committing a criminal offense without a license in the United States. So,
but to get there from
well,
zero.
I mean, one of my favorite quotes from Wall Street is, "There's room for bulls and bears to feed, but pigs get slaughtered." Don't be piggish. If you have to give away, I mean, you could own 100% of a company that's a $20 million market cap, or you own 20% of a company that's $1 billion market cap. If you have to give away equity to advisors and to VCs and to people to help you professionalize your organization, to be compliant, to afford to build the compliance tools using the blockchain. I mean, something we haven't talked about at this conference, and Pindar and I talked about it quite a bit with Dax as well, and Juan, was the technology could be deployed to improve compliance across any number of sectors. I mean, there could be a whole business built out of blockchain compliance tools. If somebody wanted to stop thinking about how to, you know, exchange currency for goods and services and said, hey, we're going to build a blockchain to build compliance tools for the stock exchange and for the regulators around the globe, and we're going to build audit trails. So I think having a culture in your firm that respects the value of compliance, that sees it possibly as even a revenue generator, and says, of every $100, we're going to spend X% on compliance. You have to have that mindset, or you're going to fail as a company.
To answer your question, it's $1 million proposition, at least.
Wait, $1 million to get registered?
Uh-huh.
I would disagree with that. I think if you want to register with the CFTC, it's substantially lower than that. If you want to register
as a swap dealer versus an
as a
FCM.
swap execution facility, which is basically a market for derivatives. If you wanted to create a hedge fund to invest, or a venture fund to invest in digital currency opportunities, you can do it for less than $1 million.
I'm talking about money transmission. And that has been the path of least resistance here. Or I should say that if you look at what products and services are rolled out, where it is a settlement function where I receive both crypto and fiat, and I do a settlement function on an exchange, or I sell or I buy some sort of a virtual currency, or I transmit value between people through some sort of a wallet, that touches on money, at least in the US, money transmission type regulation. And there are other models, like a trust company, New York trust company model that some companies have pursued to do something very similar, which may be slightly less expensive. But again, I was referring to, it's $1 million proposition in terms of legal fees, filing fees, compliance costs, bonds, surety bonds, and minimum capital requirements. And so, if you are doing something in the securities market, I guess I'd say that you could do. It's heartening to hear that you could do something
quite a bit
less,
cheaper. Yeah,
but you also have to hire some FTEs for compliance.
I think I would call that blockchain 1.0, which is people wanting to exchange Bitcoins for fiat, or fiat for Bitcoins, or be able to buy goods and services using Bitcoins or some other currency. I think blockchain 2.0 is where the industry is going, and why people like UBS have set up their lab, and Goldman Sachs and others, and Blythe Masters of JP Morgan Chase is building a company to clear and settle transactions and derivatives and equities and futures using the blockchain. That, I think, will start to look a lot like traditional financial services, investment banking activities. And I think the good thing is, I agree, maybe if you were going to have to register in 50 states in America, it's $1 million. But I think as the industry evolves and matures, that cost is going to drop over time, I think, across the board. It's the same thing when we were setting up a stock exchange in 1998. It was a ton of money to try and be approved as a stock exchange. In 2005, there were 2 stock exchanges approved in America for substantially less than what we spent initially. So I think it will get better.
You're talking about 2 different activities. So the money transmission activity, value exchange activity, is regulated as money transmission in the United States and globally, actually. And that requires special kinds of licensing for person-to-person payments. You're talking about more on the institutional side, back office, and securities. So, but there's different spheres of regulation based on activity.
And certainly it's, you have to figure out which activity your new business model falls under, and then B, it's still quite a high barrier to entry for a lot of startups, which are maybe teams of 2, maybe teams of 5 that are building out a product, maybe got seed funding for $100,000, and then are facing the inability to enter a market without either raising millions or hiring lawyers to tell them they don't have to do it. So actually, Pamela, we actually met because you were writing some of the first legal guides for how to implement multi-sig into your products. And that has really disrupted and I think forced legal regulations to evolve. Maybe we're not quite there yet on paper, but certainly we as a community need to think about these issues. I'm curious, there are, as Rick said, a very rich opportunity for compliance programs, because these software companies just aren't equipped to build compliance programs from scratch. They haven't run financial institutions before. And actually, in early 2013, when the FinCEN guidance came out, it's really interesting to see kind of the emergence of the new resurgence of AML specialists, which are suddenly the hottest commodity on the market.
Yep.
So, in addition to this opportunity from AML compliance systems, at least on the back end level, I'm wondering, are there new opportunities for increased consumer protection? Are there ways that companies can implement the technology in such a way to meet policy goals as the regulators and policymakers really figure out, what is at stake here with these new business models?
I think absolutely. I think some of the work that we've been doing with COALA, and Amor Sexton, who isn't here this time, has been doing some great work with one of the committees, and Juan's committee actually, to identify risks and kind of create a matrix that outlines, okay, if a company is operating in this space, what are the risks, what are the regulations that apply, and by identifying those underlying risks, then we can look at, is there a technological solution for that? So one of the things that we do, how I got involved with this, and I'll be very brief, but how I got involved with multisig was I was advising a lot of companies in the space, a lot of startups. And when we recognized that multisig was an option, when we started building corporate governance plans, and what I mean by that is separation of duties, accountability within organizations. And so one easy example is I had a client come to me and they said, listen, we're going to get this great funding, but we're going to get it in Bitcoin. And how should we store it? And so I said, well, obviously you need to store it using multisig, right? You don't want to put it in a single signer address because then it could be hacked and stolen. So how are we going to design this multisig address? And because the investor was Bitcoin savvy, we were able to make the investor a signer on the capital account. What we did is we created a capital account where the investor was one of the signers, and this is really cool for control purposes for the investor, because the investor then doesn't have to wait for management to give them a report as to the health of, the financial health of the company. They can very easily and clearly see at any time what the balance is in the capital account. Also, it encourages and fosters communication. So when we need to make a transfer from the capital account to the operations account, we need to get the investor involved, and you can set it up whether you do or you don't. That's incidental. But the bottom line is that it provides more communication, and so these technologies, as implemented, can actually provide the goals. We can actually reach the goals better by using this sort of governance, because what we really want to do is encourage accountability and transparency and efficiencies.
May I add something? I think that a multi-signature escrow is something that has been enabled by this new technology. Didn't exist before, at least in an automated fashion, But the primary concern of regulators, of course, you tell them, we have this consumer protection mechanism to prevent the misuse or misappropriation of funds and the loss even. But the main concern they have is the fact that Bitcoin or any private key mechanism or asset is a digital bearer instrument. So if you lose it, it's gone forever. Whereas that's not the case with any other financial service or financial asset in the world. So this is a very high challenge to overcome. So their focus is going to be, why is it that owning a digital asset is like owning an ingot of gold and dropping it in the ocean? Yep. That is a major concern. So we have to be mindful of that.
Can I just jump in for 1 second? That is one of the primary issues that we deal with Third Key Solutions, is how to create recovery systems. And so can we use multi-signature addresses for recovery for customer funds? And so part of our discussion with companies is, all right, what happens if I'm providing services to a wallet provider? What happens if that wallet provider goes out of business? How do these clients get their money back? And so that's part of what we do at Third Key Solutions, is dealing with that exact issue.
So before we open it up to questions, I just want to make sure that for this audience we get to actually tackle what legal regulations exist out there and what's happening today as these innovations evolve. In 1 minute.
In 1 minute?
In 1 minute.
So
I could do it in 1 minute.
Yeah, so I think the two spheres that you're really looking at are money transmission on one side, and then really these new kinds of products and services that are opening up new markets and derivatives, futures, and you have some recent actions there. Can you kind of describe, what is the landscape right now? What can companies do?
So here's a couple of quick triggers. So if you are dealing with custody and control over some sort of monetary value, you need to go do the research. And it's clear there's room for debate on what that means here. There's not a lot of guidance, but there is some. Second, in the area of securities, the question is whether you are tokenizing financial returns or you're tokenizing goods and services. And if you're tokenizing financial returns, where someone is able to make money off of your interests or activities of others, you have securities concerns. And if you are selling a commodity or a future where it's not a spot transaction, there isn't actual delivery, you have complicated commodities-related issues.
Yeah, I mean, I would say on the SEC has taken, in the United States, has taken the view that if you create a collective investment vehicle, like a hedge fund, and you're telling people to invest in this, and the return of the fund is going to be derived from the appreciation and the value of the coins that the fund invests in, or the technology firms that it invests in, you're an advisor, you need to probably be a registered investment advisor at either the state or federal level, depending on how large the fund is. So that's one issue. The SEC cares about fraud. If you tell people you're selling them interest in a fund that is going to produce returns based on the performance, it better be true. If it's not, you're going to get shut down and sanctioned like Brendan Shavers did with his trust. The CFTC is taking the view, and I agree with Dax, they're taking the view that if you're creating, again, a collective investment vehicle, it could be deemed a commodity pool. They're taking the view that if you're creating a platform for trading it as a swap or a derivative, you better do what you say you're going to do. Famously, Terra Exchange, the first swap execution facility, said they released an announcement that they had done trades. What they failed to tell the public was that the trade was basically with a partner and then the trade was backed out. Again, that was fraud. So you can't lie. If you're going to deal with the regulators, you better tell the truth. One. Two, if you're setting up a collective investment vehicle of any type, you need to make sure that you're registered with the proper regulatory agency in the United States. And I think foreign regulators are also, well, regulators in Europe are taking a very similar view. I think we need to have more discussions with Hong Kong to figure out how that will happen here. But the trick is talk to your regulators, talk to your counsel.
So three other areas. You need to know your customer in some contexts, which is collecting information for anti-money laundering purposes. You need to know who you're dealing with in terms of foreign parties, at least the United States or U.S. ownership. There's export restrictions. And then there are consumer protections as well, and I'll lump privacy under that. And so in terms of one of your initial questions of what sort of advice do you have, one is be a good corporate citizen. Do things the right way, even if there's not a clear definition. Do your homework. Find out how the laws might apply, and be prepared for regulators and law enforcement to try to pin you down on those things. And when it's not clear, consider talking to your regulators about it. You don't always have to, but in many instances you should, and that's part of, I think, the global need here to educate and to be precise and to have conversations where it is going to be an ongoing dialogue for a while yet. There's a lot of hard work that's already been done, and it's moved the needle, but there's a lot more work to be done. One
thing I'd leave everybody with, in business you'll hear people say, well, everybody else is doing it that way. We were all told by our parents, you know, if every lemming jumps off the cliff, are you going to jump as well? Do not follow the advice of, well, everybody else is doing it that way, because 9 times out of 10, you don't know what they've done, who they've spoken to in terms of regulators. You don't know how they're registered, or they may just be breaking the law, and then you're going to follow them right off the cliff. So speak to your advisors, speak to the regulators, and get the answers you need before you decide how to proceed.
Now we're going to open it up to questions. I mean, we have really just a seasoned panel up here, so please take advantage. AML expert, SEC, you know, new innovations, money transmission, other financial regulations.
So I noticed that, I mean, one of the selling points of Bitcoin and interpersonal financial transfers was just the low cost of the transfer. But obviously that's with the lack of regulatory cost. I noticed with the things that you're discussing that the more seasoned investment houses seem to be focusing on the high value financial derivatives trading and securities investments and things like that. From your perspective, with the cost of compliance, the cost of regulatory the regulations, are we going to move towards a place eventually where the cost of using Bitcoin for standard financial transactions doesn't look very different from using any other form of currency, but that the real opportunity is in the more sophisticated financial products where the cost is not in compliance, it's in other things that blockchain technologies might be able to there help? Or is it going to end up not looking very different once it's all mature?
Yes. The answer is, when you're talking about the size of the Bitcoin market, I always chuckle. People are like, oh, it's $1 billion, whatever. You're talking about derivatives markets and equities markets that are multi-trillion-dollar markets in the United States, in Japan, in Hong Kong, in China. The financial services firms are going to apply the technology to the highest total market cap markets first, because there's the scale and the value that will be generated from applying the technology there. So I think you're going to see a bit of a bifurcation. People continuing to explore the technology, I would say almost technology purist, and then people who are saying, let's just look at how we can apply this technology the same way we applied the internet to all of the products that are traded by investment houses.
And Bitcoin is a rail. It's any other payment rail, at least for currency. And my hope is that it stays a low-cost, micro-payment capable rail. But you're right, the compliance costs could ultimately make that more complicated. Right now, that it's being absorbed, the fees, the cost of compliance are being absorbed by the transmitters and exchanges, not being passed on to the consumers. So hopefully it stays a lower cost alternative.
So we've got a question from Dominic.
Yeah, hi. So just a couple of observations. The first one is, I think it's important to keep some of this in perspective, okay? Because I've spoken to regulators in the US, and for example, you'd be very unlikely to get 2 life sentences in an HMAX for, operating a decentralized financial scheme in good faith. The second point is, the second observation really is just regarding the language. And I see that there's a lack of distinction made, for example, between settlement and clearing, as it's currently emerging with banks, on federated decentralized systems and financial systems running on open financial systems like Ethereum and Bitcoin. And they're actually very different things. A federated financial system is run by regulated entities. It's an extension of their IT infrastructure, and the full weight of regulation therefore applies to what they're doing. And so I'm very aware of that because I'm involved with those schemes. But the approaches that should be taken on open decentralized systems like Ethereum are very different. Financial systems should be autonomous. So when I hear language like, if you're selling a token or selling a share in an investment scheme, I'm wondering what kind of schemes it is that you're actually envisaging, because they're very, very different to what anybody who has any kind of sense is actually working on. And so I just wanted to hear your opinion on, do you understand that distinction between federated systems and open systems, and why do you use language such as selling a security, selling a share in an investment scheme, when I don't think anyone really is, well, they shouldn't be anyway. You should be advising them not to do that, because that's a route that's going to lead to...
I'm going to say something very general, then you can answer that. I think that combining your question, Dominic, and Gavin's question, I think that there's an opportunity to, because of the digitization of payments, digitization of automation of systems, we have the opportunity to also redefine, challenge, reinvent regulation. And we have that, and we should be innovators, we should implement minimum controls, but we also should influence changes and viewpoints like what Dominic was saying. We have to force conversations towards the different platforms and different way of doing things, and how new forms of regulation, new forms of algorithmic, data-driven, automated exchange of data could provide the policy goals that we're seeking: consumer protection, financial crime prevention, etc.
I think
okay, I'm going to jump in here. We're at 10:30. I need there are 4 more people in the queue. We've provided extra time in the coffee break, so I'm going to ask the audience. We have potentially 3 or 4 more questions. If you want to take time from the coffee break, that's fine, but it's your time. So do we want to let this run? We have 4 more questions in the queue. Yes or no? Raise your hand. Yes? Okay. Over to you, sir.
One quick point to Dominic. You have the Winklevi Exchange Traded Fund, which is an investment company, basically. You have the Barry Silbert Bitcoin Trust. You have people thinking, there are others, I mean, I've been approached by people setting up traditional hedge funds. You do have people who are looking at trying to shoehorn in this universe into traditional financial products. Is it a seamless fit or a perfect fit? Hell no. It's very awkward. But I think you're starting to see a convergence. The fact that 20 banks now have gotten together and said, we're going to explore how to use the blockchain technology in a variety of business areas is an indication that there is a convergence occurring between the blockchain world and traditional financial services.
And very quickly, just on that point, when you talk about tokenization, you say, well, no one is doing things like that. Well, we've skipped a step, which is that we've looked at practical implementations, things like crowd sales, call it a coin, call it a token, some sort of a right. There is a thing that is being used maybe in a public-private key infrastructure to obtain something, and we or to transfer some sort of a value. And you admittedly you've gotten the legal overview or an overlay on what that is, and it's not being talked about as a security, but things like crowd sales often are that, and that is the exercise to figure out what are you doing, and that's where I say is it tokenized goods and services. Is it goods and services you're selling, software, storage, you name it, or is it something else? And there is room for analysis there.
And also just one comment, the CFTC, the recent ruling that came out against Terra Exchange and CoinFlip, if you look at footnote number 4, they do mention that there were OTC forward contracts that were also offered on the platform, but they specifically say, equivocating of course, that this may or may not violate existing securities laws, but we do not address this conduct here. So I think there are many open questions that are going to be, that need further exploration and will be further clarified moving forward. Because what we're really looking at are platforms. We're not really looking at regulated institutions in some cases, at least. And the question of ISP liability was something that was, hotly debated in the internet days. We had to make new laws like the DMCA that allowed platforms to operate without liability for their end users. Now, of course, this is financial regulation, so a bit distinct. But then you introduce, on platforms like Ethereum, distributed decentralized autonomous agents or organizations, the question of who is the you is also going to be further defined.
Yeah, but don't forget, CoinFlip was sanctioned for operating an unregistered swap execution facility. They basically were told you didn't register as a market and you should have. Now, that's why it's important. And I agree with you, Dominic. There's a difference between networks that are run by the market participants and then a protocol like Ethereum that people may explore. And I believe the big banks are exploring Ethereum along with Ripple and others, like were presented yesterday, to try and figure out, do they use one of those types of protocols or do they develop their own that they host through their own systems? Because these big banks don't want to wind up on the Wall Street Journal that they used a protocol that had some bugs in it or flaws.
Another question?
Hi, my question is which jurisdiction right now is the most advanced in terms of these laws, not only from a business standpoint, but from a consumer protection standpoint, right? From a business standpoint, for example, there aren't that many places in the world that you can start a hedge fund because there just aren't laws governing hedge funds in most of the world, right? And then there's a very different implication of my protection if I deposit my money in Citibank UK, Hong Kong, or New York, because they offer different protections. And the second part of the question, so the difference, where should I put my money, my Bitcoin, and where should I start a Bitcoin business? And second part of the business, second part is is there any differences in, if I want to ask you, is Bitcoin here to stay or grow? For example, cash is definitely not here to stay, because if you try to walk into HSBC with 100 grand and try to deposit it, before they would call the police, now they don't even call the police, which is worse. If they call the police, at least I can say, look, I'm clean, right? If they don't call the police and no, you can't put it in, I'm really stuck. And in Europe, you can't use cash anymore over 1,000 euros. So, I mean, these are indications that cash is not here to stay, right? At least for now, the direction we're going. I mean, is there any indication that Bitcoin is here to stay because they're doing this and that, or no, it's not because they're banning this and that?
I don't know if Bitcoin's here to stay. I mean, I jokingly tell people, if you remember Betamax and VHS, the competition between the two video tape recorder. Excuse me, not the technology, the currency itself. I think legally and politically, yes, it is. I don't think anybody, it's going to be somewhere. It's going to be in the system. Your question about which market, I think the United States has actually provided a fair amount of guidance now on how to deal with this technology and how you have to comply with the law. I mean, there's still room to go, but I think the United States has been fairly transparent, and the CFTC sanctioning a couple people was helpful.
Europe is, I think, easier. It is easier to launch a business in Europe now, is I think the conventional wisdom. But if you're targeting U.S. customers, you have to deal with the U.S. anyway, right? And that is one of the questions about how does jurisdiction apply. it usually applies both where you're set up and also where your customers are. And so you can't set up offshore somewhere and avoid all U.S. regulations.
Okay,
And
last two questions. Keep it to a question, no platform speeches. Keep it very short.
Just one note, though.
Question is great.
You had mentioned where's the best place to put your money, and then maybe where's the best place to really set up the business. There's a tension right now between the ease of setting up your business is where things are less regulated. As a consumer, you may not want to go to a business that's in an area that's less regulated. So it's kind of a catch-22. The businesses that are able to set up are doing it in places like Isle of Man, others which have more lax jurisdictions. And as a consumer, you might want the protection of U.S. laws and the clarities that are coming out, or Europe. So that's the conundrum there.
Sorry, and that's the crux of it. We're not asking who's got the most complex jurisdiction regulations. We're asking who's got the balance right, who's got the consumer protection and the anti-AML, but still allowing innovation to proceed in a safe manner. Who's got that right? Where's the best jurisdiction?
So far, Europe.
Yeah, but I think you have to also look at the size of the market, the potential. If you're thinking like a business person, not a lawyer or a compliance professional, you're thinking about where am I going to make the most money? Where am I going to get the highest valuation for my company? And sometimes biting the bullet and dealing with maybe a more cumbersome regulatory environment is something you have to do to reach your full potential.
No, that's not the question yet. Who is doing the best regulations?
Sorry, can you speak into the mic?
Sorry. I'm not asking what's the best place to get a valuation. I'm saying what's the best place for the people? Where is it that stimulates productivity and innovation?
I think I agree with Dax, it's Europe.
Europe has looked at the issue, so they haven't put their head in the sand. They've taken a lighter touch to regulation. And there's a passporting concept, exactly, which is why Europe.
Yeah, but one problem with Europe, they have a passport, but then each country adopts the pan-European directives in their own way. I mean, you even see this in traditional equities trading. The French don't recognize the same notions of agency transactions the way the British or the Germans do. So I don't want to create the impression that Europe is a Shangri-La for doing this. I mean, the fact of the matter is it's going to be difficult in any sophisticated market.
I can't give you the answer that you're looking for, which is this jurisdiction. What I can tell you is that the industry is developing best practice, auditable standards so that you can, as a consumer, look at these companies and make a reasonable evaluation as to whether or not they have consumer protection built in. So we don't have to rely on regulation and the jurisdiction per se. We can use things like the CCSS, and that's the exact purpose of the CCSS, is to create auditable standards so that consumers can say, okay, this company has been independently audited for these consumer protection policies. They have a key migration policy. They have a key compromise policy. They've looked at these issues, and you can say, okay, I see that this company is level 3. I have confidence in them, to whatever extent that you can, that they've set up their business appropriately. And so I don't think that we can look to regulation and government to give us those protections, particularly if you're interested in privacy issues. And I think you mentioned AML issues and collection of data. So I think that we need to go beyond the scope of let's look at one jurisdiction and say, okay, unfortunately, maybe more of a micro look at company by company.
One last comment from Dax. I think it's an open question. I think there's a race for a jurisdiction to strike the right balance between protecting innovation and making sure that there are standards in which consumers and the financial networks are protected. So we encourage all jurisdictions here, anyone representatives, to really learn about where they can strike the right balance. And then one last comment.
If you go to our blog, Virtual Currency Report, we have an international tracker where we have listed the positions that governments have taken around the world on virtual currencies, which will give you some sense to who's hostile and who's not. It's something we try to update as basically a service to the industry. I'd ask if you do look at that and you see that we've gotten something wrong or we've left something out, please let us know. We include that as a resource, and it should give you some sense.
And thank you guys for being so patient. And we're going to be available for coffee, so please feel free to come up to any of our amazing panelists. Thank you guys for offering all of this information to the
Thank you, and just a writer. Thank you.